Remember that these are the fundamentals that actually move the market, not these little tiny articles on Cointelegraph or the Daily Huddle that the vast majority of influencers cover. This is the stuff actually causing impact on, risk off sentiment. Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. In today's video, this is going to be a very educational video breakdown. We're going to be going over full fundamental analysis, forward-looking into what to expect this upcoming week for risk assets to thrive, given the US data front and all of the fundamentals that we are set to experience this week. We have been tracking this stuff here at CYPRX, giving you guys insights not only on our Instagram, not only on YouTube, but also call outs on the X space that have all come into fruition. As of right now, the current market cap of the digital asset space is at 1.97 trillion, up about 1.45% for the day. The fear and greed index is hovering at around 74 out of 100. So what's going to drive market sentiment this week? Hopefully this video breakdown gives you guys an insight into what to be tracking this week, given the data that we are set to experience. If you all enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe. And then at the end of this video breakdown, we're also going to throw in some technical analysis on HBAR, showing you guys some call outs that we made in our private CYPRX community, where we're going to be looking to take profit if targets are met to re-implement that capital at further dollar cost average positions. Again, just building our long-term bags and our long-term holdings by scaling out of intraday positions, understanding that the vast majority of crypto transactions right now are due to day trading. So taking advantage of those opportunities, we're going to give some technical analysis on HBAR towards the end. So make sure that you stick around. So first, let's jump into this post right here. Okay. Now, again, remember, the vast majority of this stuff is boring, but this is the information that you all need to be paying attention to track these intraday moves, these price swings, and market sentiment in the digital asset space. What's causing inflows of riskier assets? What's causing outflows? Why do you see crypto sell off one day and then flip bullish the next? This is what we've been attempting to try and get people to see and understand by giving you all these fundamental insights. And if you all are interested in having these fundamental insights and insights to our technical analysis strategies, you guys can join our monthly program by visiting CYPRXtrading.com. Like I mentioned in previous videos, there's about 103 spots left. So we're going to start with this market overview. I said to you guys, and this is going to play an important role, I want you to pay attention to where we put this information out. We are not influencers that hype coins. We're not influencers that tell you guys to buy at tops and then get dumped on. No, we try to put value out to you guys when it matters the most. And I'm going to show you that in today's video breakdown. Not only via fundamentals are we putting them out at bottoms, but in our private community, we're also showing individuals where we look to dollar cost average in at bottoms. Okay. So here it goes on to say, market overview. Crypto, stocks, Bitcoin, XRP. Last week, U.S. equities maintained their upward trajectory, with the S&P 500 hitting yet another record high. This bullish momentum was primarily driven by robust corporate earnings, which buoyed investors, that means strengthened, investor confidence and mitigated concerns surrounding escalating bond yields. Notably, the yield on the U.S. 10 Treasury saw a significant uptick to approximately 4.20%, marking an increase of approximately 25 basis points since the year's commencement. Current sentiment, this is important because this is what I said to you guys before we saw this most recent market uptick. My current sentiment, our outlook remains optimistic, with a positive risk sentiment expected to endure in the short term. Hopefully, it lasts. This optimism is supported by the anticipation of robust economic growth in the United States, coupled with a moderation in inflationary pressures and potential Federal Reserve rate cuts lingering on the table. Heightened institutional interest in cryptocurrency has also further bolstered this bullish sentiment. Fed rate cut expectations. Despite the prevailing narrative of Fed rate cuts, recent market sentiment indicates a diminishing probability of immediate Fed action. Markets now project minimum likelihood of rate cuts in March, with expectations easing not materializing until June. Projections for the year indicate a scaled back anticipation, with investors expecting fewer rate cuts compared to earlier forecasts. Overall, we have some inflationary concerns. However, we caution that sustained wage growth in the tight US labor market could reignite inflationary pressures beyond the current fiscal year. So we need to be paying attention to inflation, how this data comes out every single month moving forward from this point on, and how that affects market sentiment, i.e., risk on, risk off. Is the Federal Reserve, are global central banks across the board going to start to cut rates, or are they going to maintain interest rates higher for longer, strengthening their domestic currencies, weighing on the overall risk sentiment? We need to be paying attention to that. So, let's look at when I put this information out, and let's fast forward into this week's data. So you can see down here at the bottom, 10:28 a.m., February 17th. Let's go look at where this was put out to you guys on the charts, specifically focusing on this segment right here, where I said to you guys, our outlook remains optimistic with a positive risk sentiment expected to endure in the short term. So we told you guys that we were expecting bullish sentiment to continue. And look at where we put this out. See, the market was trending down. This is the total cryptocurrency market cap, excluding Bitcoin and Ethereum. Specifically, our attention is focused on altcoins here. So look at how the market mood was a little bit sour as we posted this post to you guys, where the market dwindled down a little bit, roughly to around $527 billion for the total cryptocurrency market cap, excluding BTC and ETH. However, we noticed that the sentiment started to change hands a little bit. So we put this post out to you guys again at the bottom of price action, prompting opportunities not only to our personalized private community, but also to you guys publicly, putting our analysis on the line so you all see that we as a community here at CYPRX understand these things and how to implement them into the market to actually gain from them, not to lose money, not to buy at tops, but to actually dollar cost average in properly, to see an appreciation on your portfolio. Hopefully you're not one of those people that's just like, oh, I want to put $1,000 in this market and I don't care what happens because I'm going to invest for 10 years. Who cares if it loses money in the short term? No, that's the wrong mentality to have. You should, at least any smart investor would, want to see an appreciation in their portfolio, even if it's in the short term, for their long-term bags, if that makes sense. Okay. Fast forward, let's go into a weekly forward look as to what we could potentially see happening this week. You guys can see the fundamental data front. I had some individuals ask me what's the easiest way to see this information. There's a free website called forexfactory.com. You can go check it out and you can see insights into all of these fundamentals. However, I personally pay for the Reuters terminal. It's a lot more expensive and gives you a lot more access to fundamental data and insights. I don't recommend that for anybody that's not financially stable and can actually afford it. So this is your best free alternative option, okay? And you can see right here, we have monetary policy report hearings, FOMC meeting in minutes, flash manufacturing PMI and services PMI from both the UK and the US. We also have some unemployment claim data from the US and existing home sales, all to be paying attention to. So I'm going to read to you guys, I know again this might be boring, our insights into our private CYPRX community and what I tell the students on a weekly basis before the week even starts so they can wrap their head around the potential outcomes. Here this reads: navigating the week's market landscape. A comprehensive outlook as we embark on a new trading week. By the way, when we get done reading this, we're going to tap into the technical analysis on HBAR, so make sure that you stick around. Pay attention. This stuff is important, and if you don't know how to track this, or you've never tracked this, this is going to give you a helpful insight into what you should be paying attention to, not all this other influencer drama and bullcrap that's going on in the internet and crypto space right now, distracting people left and right. This is the stuff that actually matters. It is essential to navigate the market terrain with a keen eye on various factors shaping investor sentiment and market direction. With Monday marking a bank holiday in the US, i.e. President's Day, we anticipate reduced volume and volatility, setting the stage for a potentially calmer start to the week. Our focus sharpens on Tuesday as our attention turns towards the UK monetary policy report hearings. This pivotal event sees the Bank of England governor and several MPC speakers testifying on inflation and the economic outlook before Parliament's Treasury Committee. We will be focusing on the commentary assessing whether a more hawkish or dovish tone emerges, particularly regarding accommodative monetary policy measures. Given the persistent inflationary pressure in the UK, the tone of these remarks holds significant implications for market sentiment, particularly concerning the Great British Pound. So be paying attention to this information, ladies and gentlemen, whether they deliver a hawkish tone, which was continued from previous weeks, or they reverse roles and they switch to a more dovish tone, which would weigh most likely on the Great British Pound strength. On Wednesday, US FOMC meeting in minutes. Midweek brings us to the release of the U.S. Federal Open Market Committee, or the FOMC meeting in minutes. We will look for insights into the committee's discussion with a focus on how their tone may influence the market mood. A dovish stance could fuel investor appetite for risk assets. So that would be positive for us as risk asset holders or investors or day traders. We would therefore want to see a more dovish stance or tone from this FOMC meeting. Or sorry, excuse me, this FOMC meeting in minutes. It's not an FOMC meeting, it's the minutes, okay? Potentially exerting selling pressure on the US dollar. So that would most likely result a dovish tone in sell pressure on the US dollar for Wednesday. Potentially exerting sell pressure on the US dollar. Conversely, so the opposite side of things, a hawkish tone may tamper optimism in risk assets and strengthen the dollar, signaling a need for prolonged interest rate hikes, which is what I personally think is going to happen. Hopefully, we get the opposite. We get a more dovish tone, but I think they're going to stick to their hawkish tone, let the markets know that rate cuts in March is way too premature, that they're going to keep rates higher for longer. They're going to be data dependent, and they're going to further push back the rate cut narrative, which will weigh on market sentiment and risk assets. In my personal opinion, hopefully we get the inverse, we see a dovish tone, and we see risk assets continue to thrive. Now, second part of this, it goes on to read, Thursday, UK flash manufacturing and services PMI, US economic data. Thursday's agenda features the release of flash manufacturing and services PMI figures for the UK and the US. For the UK, it's expected to show a slight rebound from previous readings. Now, positive PMI figures from the UK accompanied with a hawkish comment from the Bank of England speakers could bolster the Great British Pound, or i.e. strengthen it. Conversely, any unexpected downturn in PMI figures from the UK, coupled with, and remember, we need to see that couplation, coupled with dovish commentary from MPC speakers, might exert pressure on the Great British Pound. Meanwhile, as we head into the New York session, in the US, market attention will be on unemployment claims and PMI data. A slight increase in jobless claims, along with a dip in PMI figures or downbeat PMI figures, coupled with dovish remarks from Fed speakers, could weaken recent dollar strength, which could continue to foster a risk on market sentiment. So as we head into Thursday, what we would want to see a continuation in this optimism and this bullishness in the cryptocurrency asset class, i.e. risk assets, is we would want to see, just looking at the calendar here, you can see US dollar unemployment claims coming out a tad bit higher than previous readings. We would want to see this come out at 217,000 or higher. That would signal weakness in the labor market, more people filing for unemployment claims, and potentially weigh on the US dollar strength. We would also want to see that coupled with some dovish comments from the FOMC meeting in minutes, along with downbeat PMI figures. Here you can see the previous readings for these PMI figures, manufacturing and services, were at previous readings of 50.7. The expectation of the market forecast is set to come out with a slight decline at 50.1. And then same thing with the services PMI figures, set to come out with a slight decrease from previous readings at 52.5 down to 52. So if we want to see dollar weakness on Thursday, we want to see higher unemployment claims, and we would most likely want to see these numbers come out below 50. If these numbers came out below 50, that would weigh on dollar strength. That coupled with higher unemployment claims and dovish Fed speakers, we would definitely see dollar back below 104, strengthen risk assets, and risk on market mood prevail. Inversely, let's talk about the inverse real quick, okay? This is important because if it comes out optimistic or above market forecast, strengthening the dollar, what is that most likely going to create for Thursday heading into the weekend? A risk-off market mood, dollar strength, rate cut narrative fading, strengthening in the U.S. economy, right? You guys get the drift so far. So unemployment claims, if it comes out 217 or below, or anything below previous, signaling health in the U.S. labor market. And then we also see at the same time, flash manufacturing and services PMI figures come out upbeat, higher than previous readings or above market forecast. That would most likely strengthen the dollar, weigh on risk assets, create a risk off market mood. Hopefully you guys are paying attention, maybe potentially even writing this stuff down. So then to close out the week at 7 a.m. on Thursday, we have US existing home sales. So closing out the week, I wrote, our focus remains on economic health indicators, particularly U.S. existing home sales. This metric serves as a leading indicator reflecting the broader economic landscape's health. A forecasted rebound from previous readings could offer insights into consumer confidence and economic resilience. So here you can see, looking at 7 a.m., the last data release on Thursday, existing home sales, it is set to come out with a slight rebound or increase, i.e. uptick from previous readings at 378 million to a forecasted reading of 3.97 million. So if this data comes out optimistic or upbeat for the US, meaning lower unemployment claims, an upbeat in manufacturing or services PMI figures from previous readings or forecast, and higher existing home sales readings upbeat or rebounded from previous readings, we're most likely going to see dollar strength prevail, risk off market mood for the second half of the week, and as we head into the weekend. So be paying attention to this stuff. As risk asset investors, what we would want to see is a dovish tone from the meeting in minutes. What we would want to see is higher unemployment claims, signaling weakness in the labor market, weighing on the dollar and the strength of the US economy. And then heading into the flash manufacturing PMI and services PMI figures, we would also want to see a decrease, signaling lower than forecasted in previous readings, showing cracks or weakness in the US economy. And then same thing with existing home sales. We would want this data to come out below forecast, potentially even lower than previous readings. That would weigh on the US dollar strength, bring dollar back below 104, drive optimism in risk assets, creating a risk on market mood due to dollar weakness. And that would make us all happy at the end of the day. Obviously, of course, as risk asset investors and day traders, that would boost my bags. I know that it would do the same for you guys. So at the end of the day, these are the economic factors that you all should be paying attention to. I hope that in a nutshell, that gave you guys some insightful help as to what to be paying attention to throughout the week. Remember that these are the fundamentals that actually move the market, not these little tiny articles on Cointelegraph or the Daily Huddle that the vast majority of influencers cover. This is the stuff actually causing impact on risk on, risk off sentiment. So make sure that you're tracking this stuff: economic data, inflation, interest rates, central bank speakers, the global economy. Okay, tap into this stuff. If you're not too familiar with it, now is the time to learn. And again, we've created a helpful platform, i.e. the CYPRX community, to get you involved, to get you dabbled into this information, to learn it, understand it, and then actually apply the fundamental knowledge to technical analysis to enhance your entries in this market, to enhance your understanding on when's a good time to enter and when's a good time not to, right? If you don't know that and you're just aimlessly downloading an application on your phone, dollar cost averaging in a cryptocurrency, hoping to become an overnight millionaire, again, if you think that getting into this market and becoming successful is going to require the bare minimum of you, you are dead wrong. You need to take an educational approach. You need to further your insights into this space, into what drives market optimism, weighs on risk mood, and what causes these buy and sell moves in the market via fundamentals. Okay, so first half of the video breakdown knocked out. Now let's get into the technical analysis real quick. One of our CYPRX mentors absolutely nailed the bottom of this recent HBAR move. So that's why we are going to go into some technical analysis on the HBAR, giving you guys some price predictions and what we could potentially expect if we see risk off market mood, and what we could potentially see via price continuation if we see a further risk on market mood. Okay, so let me just give a shout out to our institutional scalper who provides these insanely accurate delta zones to our private CYPRX community. Again, if you want access to them, visit cyprxtrading.com via our monthly subscription and you have direct access to them. I want to take your attention to our private group chat, HBAR analysis section. And if we scroll all the way back here to January 29th, our institutional scalper sent these buy zones. The green levels are buy zones on HBAR. You can see here, just opening it up in the browser, the psychological levels of 0.7 cents and 0.68 cents, right? So if we go over on the charts to January 29th, right? I believe it was January 29th. Let's just double check that. I always like to show dates. Yep, January 29th, looking at the screenshot, okay? And we go to the charts, you can see here, this is when the screenshot was put out. So this is where price action was at, okay? Right down here in this area, hovering above 7 cents. Price came, tapped into the delta, roughly around the 0.068 cent psychological level, as you can see from the screenshot right here. And price flipped bullish, went absolutely nuts. Massive gains on HBAR, was one of the top performers over the past couple of weeks in my personal portfolio. Absolutely phenomenal information shared in the private CYPRX chat. Again, it's not investing advice. He is giving dollar cost average positions that he generates from his software. It is up to you all, if you join our community, to decide to trade from these levels. It is not up to us to press these buttons, buy and sell for you. It is up to you all. But we give these levels in our private CYPRX community well in advance, as you all can see, and they are updated on a daily basis. So we're going to get into some technical analysis from these specific cycle levels. I have the levels updated on my charts. So in cahoots with what I just mentioned to you guys, if we do see a risk on market mood prevail in the next couple of days, remember what I said would need to happen in order for that to take place. If you're still here, smash that thumbs up button and subscribe. If we want to see, in my personal opinion, again, we could see some massive institution flood into this market at any random point in time. We could randomly see them flip the switch and it could turn on the utility lights. Who knows? I'm saying from an intraday trader's perspective, via fundamental knowledge and understanding, if we want to see a continued risk on market mood this week, we need to see dollar below 104.100 suppressed by fundamentals, meaning we want to see dovish speakers from the FOMC meeting in minutes, rate cut narrative stay and maintain on the table. As of right now, remember, rate cuts in March pretty much are off the table. We want to see that narrative persist. Okay, we want to see it continue. We want to see the market greed continue based off the ideology that central bankers are going to cut rates sometime in 2024, which has been driving risk sentiment. Okay, we also want to see services and manufacturing PMI from the US come out lower than forecast and lower than previous, weighing on the US dollar. Couple that with higher unemployment claims will most likely result in a continued risk on market sentiment. So in a scenario where we see all of those things play out and risk on market mood continue, what we are expecting on HBAR, give or take a slight pullback, is a continuation move up into the high 9-cent range. So we could potentially see, if we do see a continued risk on market mood, a potential pullback into the high 8 cents, maybe even the potential low 8 cents, and a continuation move up into the 0.96 psychological level as our first target area. Now, given the fact that we just recently broke this intraday high right here, our next target that we would need to break above is 10 cents on HBAR. If at any point in time we can break above 10 cents on HBAR, our next immediate bullish target will be 11.5 cents. If we do happen to break 11.5 cents, I do not have it marked on my charts, but our next intraday targets for HBAR, if we break 10 cents, hold with bullish momentum, push towards 11.5 cents with continued risk on sentiment, driving demand for crypto, pushing above 11.5 cents, we will be targeting the 13 to 14 cent psychological level. Okay, so keep those targets in mind. If we see risk on sentiment prevail, give or take a slight pullback, we're looking for a continuation up into the high 9-cent range, targeting potentially this previous high here at 10 cents. If we can break that with bullish momentum and continued risk on sentiment, driven by dwindling US economic data, a weakness in the dollar below 104 heading back towards the low 103s, which would be phenomenal for risk assets, then we could potentially see HBAR heading towards 11.5 cents. Inversely, okay, let's talk about the opposite side of the spectrum. That would mean if we saw strengthening in US economic data, an upbeat labor market report signaled by lower unemployment claims, i.e. less people filing for unemployment, showing health in the labor market, right? Upbeat manufacturing PMI and services PMI figures and higher existing home sales, coupled with hawkish comments from Fed speakers signaling that interest rates need to stay higher for longer and there's no potential on the table for rate cuts in March, right? That would strengthen the dollar, most likely push the dollar back to its previous 11-week highs, hovering at around 104.900, inching its way closer towards 105. That would weigh on risk sentiment. What we can expect in that scenario is a potential move back down to correct this previous bullish move from where we had seen a move above 6.5 cents all the way up into roughly around 9 cents. Ending the week if we see a risk off market mood down in the low 8s, potentially even breaking back below 7 cents. This type of scenario would be if we saw risk off sentiment, dollar strength boosted by optimistic US data. So our first bearish targets would be roughly around 8.5 cents. Below that, we're looking at the high 7s. And then anything underneath the high 7s, our next bearish target would be a retest of roughly around the 0.68 to come and correct this entire previous bullish move, breaking down below 7 cents and retesting, potentially even accumulating more orders down here in this area before we head into the next week for market direction. Okay, hopefully that made sense. So Risk on market mood. You guys have those fundamental catalysts that would drive that risk on sentiment, show weakness in the dollar, and drive optimism and strength in risk assets, potentially propelling HBAR above 9.5 cents, targeting this high here at 10 cents. Risk off market sentiment, the inverse, driven by strengthening US economic data, hawkish comments from Fed speakers, right? Optimistic labor market data, and dollar strength heading back towards 104.9, inching its way towards that 105 mark. We would most likely see a pullback on HBAR back down towards the 7 cent range, potentially even breaking that, heading back down towards 6 cents. Okay, so be paying attention to these fundamental factors moving forward. Hopefully you guys enjoyed this video breakdown. I know that it was a lot, and I know that I'm talking fast, but that's because people's attention spans don't last long enough to watch videos that are longer than 15, 20 minutes. So I try to get all this information in a nutshell. Again, if you guys want access to this on a daily, weekly basis, not only fundamentals, but also technical analysis before we give it to the public social media platforms, then consider subscribing to our monthly program. Again, it pays for itself. I'm telling you guys right now, there's so much value jam-packed in this. Here at CYPRX, that is our main goal, is to provide unconditional amounts of value. So if you guys want access to that, we'd love to have you on the team. Like-minded individuals just like yourself looking to make a way in this market by educating ourselves further, pushing ourselves to our limits, and really understanding when's a good time to invest and when's a good time not to. Many blessings to you guys. I hope that you all enjoyed this video breakdown. If you did, do us a favor, smash that thumbs up button. If you learned something about fundamentals, subscribe so that way you don't miss out on any further video breakdowns, regardless if it's our research approach, regardless if it's our technical analysis approach, or if it's our fundamental breakdowns. I hope that in some way, shape, or form, you are getting value from this community. Many blessings to you guys as always. Be cognizant, be aware. Remember, we're not telling anybody to go out there and invest in digital assets. If you invest in digital assets, hopefully you're doing it on your own accord, your own risk sentiment, and assessing your risk properly. Be safe out there. I cannot stress enough. Okay. As always, I will see you all in the next video breakdown.